if we're going to put a client into any asset in any market, we're assessing downside risk. And if you've got 40, 50% renters in a suburb and they're all starting to put their attention elsewhere or profit take and sell properties, you're going to see an oversupply pretty quickly. And then they will soften first and harder ahead of what the Perth median does.
Our motto is buy without regrets. And so
if you can buy a property that will serve you for 10 years as opposed to 3 years, that will serve you well. And something
buying a great property today, that's not just what it's about. It's also getting something that could be ripe for improvement when the time is right for that investor or for the next buyer.
You think about, right, lifestyle, what's important to you? How do you get to work? What do you need for your family? What amenities like parks and shops? Then you look at the budget.
Welcome to Street Secrets. I'm Chris Bates. I'm a mortgage broker since 2013. And in this podcast, we're going to be interviewing Australia's leading buyer's agents, ones with decades of experience, have the local insider knowledge on the street, and can really help you with your buying process, no matter whether you're a first home buyer, upgrader, investor. In this podcast, you'll get access to Australia's leading buyer's agents' minds every week on a Thursday. What's the word on the street? Welcome to Street Secrets. I'm Chris Bates. Thanks so much for joining us. Today we've got all the way to the West Coast, Matthew Hughes. How you doing?
Very well, Chris. How are you?
Very well. Thanks for coming on. I mean, we've known each other for some time. Love what you're doing over there on the West Coast and your philosophy around property. But for those people who don't know you, let's dig a bit deeper into your sort of backstory. You know, how long you've been running a buyer's agency for, what were you doing prior, and what got you into it?
Yeah, so we had a similar chat. I think last time I caught up with you and Veronica and went through the background. I started out as an investor, bought my first home at 19. I'm 47 now, so that was some time ago. The house was $95,000, I think, and the mortgage was about $700 a month. So things have changed a bit since then. I didn't go into property as a profession until it's been about 13 years now. So it's always been a passion, and then it was something I wanted to do, but I had a successful telecommunications business for many years and it was easy and lucrative, and I sort of was stuck in that to a degree, even though I wanted to make the jump. So I eventually did make the jump across to initially a sales role in property, and was selling some properties that at the time I wasn't aware, but weren't the best sort of things to be selling to people, which I'm open and honest about with people when I talk to them about this. That was my first exposure. And it didn't take me long to realize that what we were selling was good for us and probably not good for the end user. So then there was a pivot across to the light side, I guess, and going into advisory and buyer's agency. So I took a role with one of the more prominent WA companies, who I think you know, and spent a couple of years there learning the ropes. Really good apprenticeship, learnt from a previous guest of yours, Ray Chua, who was there at the time, and many others. So picked up enough to then go out and start my own business, which was now probably nearly 10 years ago. So I launched as Capital Property Advisory back in 2016, and we've since expanded the group to include finance and mortgage broking under Capital Lending Advisory. We've got Matt Black Real Estate doing our property management in WA and Victoria. And we're also looking at potentially splintering off our prestige home buying division into its own separate entity and brand in the new year as well, and really focusing on that. And that's something I'll be doing personally.
I love how you're just being quite honest with us there on just learning and growing as a profession. And I reflect all the way back into early days in financial advice back in 2007, 8. I mean, I didn't know what I was doing. I was just this new advisor in London at the time, and I was trained to do, and that was selling these structured products. Luckily, what I was selling had like a guaranteed investment. They were just expensive products that just weren't great. Unfortunately, in the property market, a lot of people's initial years, they get wrapped up in some type of company selling some type of strategy, whether it's off the plan was very common maybe 10 years ago. But, a lot of people are landing their first jobs in buyer's agency world now, and they take them a few years, I feel, and then they go, hang on a sec. These guys are really just throwing mud at the wall, really, and haven't really thought about what they're doing for their clients. I mean, have you seen that in recent years where a lot of buyer's agencies are basically growing quite fast, and a lot of people are joining these buyer's agencies with good intentions, but they just don't know that there's a lot more to it?
Yeah, look, I think there's a couple of issues there with the industry and how things are trending at the moment. We've seen the proliferation of buyer's agents across the country. I think when I started, there might have been 4 or 5 in WA, and now there might be 65. They're popping up all over the place. The issue at the ground level is that there's not enough education and regulation and licensing requirements. So the barrier to entry is too low, something that as a board member of PIPA, we talk about a lot, and hopefully we can help lift that bar so that there is more training and more requirement for people to adhere to higher levels of regulation and legislation, because it is a little bit loose at the moment. And so then you do have the potential for new people who are either inexperienced or lack integrity, or both, hopefully not both, taking money from people as an advisor and really not knowing what to do in terms of providing that advice because they lack the experience.
Yeah, and I think what you've done well there is you've just basically put out the white flags. I know at main time, maybe that wasn't best, but I educated myself and I pivoted and I use those for power of good now, right? So those learnings you probably have done there, probably now you instill your ethics today, right? And making sure you really are making good recommendations for clients. I mean, obviously now you've been a buyer's agent for a decade plus, right? And running your own business for some time in the Perth market. I mean, you would have also seen a few different Perth markets, right? You know, when you started to the COVID boom and now this market we're in now as well. Like, how is that also helping you ride this Perth market over the last few years? And how does it help your clients having that 10 years plus knowledge?
Perth cycles are something I've been monitoring for some time, probably 2+ decades now, even though I didn't become professional until sort of 12, 13 years ago. Having seen a few cycles now, they are a little bit easier to understand, but I also think that the history is not as much of a predictor of the future at the moment as it has been perhaps 10, 20 years ago. And so things are a bit more complex, a bit more nuanced, and trying to predict headwinds and figure out what markets are going to do has become a little bit more complex. There is more information out there, but having the experience that I have, plus having a data scientist in-house and a few other people that help us on our investment advisory committee, so a couple of the top researchers in the country sit on that committee with me, helps us decipher how to weight different metrics and what to look at and what to avoid, most importantly, because there are a number of places in WA over the last 5 years that these new buyers agents or these big national buyers agents who are buying big volume piled into, and we didn't buy at all in some of those areas. And we've been talking about this for a while now in terms of the downside risk of buying into those hotspots, and it's starting to sort of bear fruit in terms of what I predicted would happen in terms of oversupply, rent softening. All of that is happening ahead of the overall Perth curve in those areas.
Yeah, let's unpack that a little bit later. I think the Perth market, if we just sort of put that to one side, do you think it's sort of come in vogue, right? But there's a lot of people, new people moving there for work opportunities or lifestyle, etc. So if you think about just the Perth as a city, you know, structurally, how do you sort of break it down in terms of where people want to live and different tribes and where people are willing to pay a lot more for certain lifestyle benefits? How do you sort of break it down in your mind?
I have this conversation with clients quite a bit when we're comparing different locations. And so if we use, say, Melbourne and Perth as the example, the capital growth drivers in Melbourne and Perth are probably the same in terms of the top 10 growth drivers, but they're in a different order and weighted differently. And so proximity to the CBD is less of a driver in Perth. We're not full of multinational companies in the CBD. We don't have as many workers in there. We don't have as many residents. And it's not really that attractive at the moment, especially from a retail perspective, from a hospitality perspective, from a nightlife and entertainment perspective. So I think that part of Perth has a long way to go, and there's always programs that they're pushing along and trying to improve that, but everything tends to move pretty slowly over here in WA. So what people have been more interested in terms of owner-occupiers and that sort of demand is areas where there isn't a huge amount of rezoning perhaps, so you're not going to have a lot of medium or high density, even though that will be coming in most areas. Areas that have a lot of full-size blocks and not a lot of potential for subdivision and smaller blocks and therefore cheaper product tend to perform really well with owner-occupiers. School catchment areas are something that we look at very closely, and just making sure that we're putting people into those areas that are predominantly owner-occupier driven because they're much less transient in terms of the demand for property.
Do you see it similar to a Sydney market then? Proximity to CBD is obviously a key because of commute times and things like that, but it also does splinter off a little bit up and down towards the beaches and up and down the coast. Do you see it similar to that a little bit more so than a Melbourne? And how do people think about it in Perth? Are they really, if they had to go closer to the city or closer to the beach, is it really trying to hug that coastline that people really want to focus on?
Yeah, I would say the proximity to the coast is absolutely a bigger driver here than the CBD. Obviously in Melbourne, because of the weather and the structure of the city, it's not like that. And commuting here is not a massive deal if you do have to go into the city. I mean, nothing in Perth is sort of more than 30 minutes away. So we're still a relatively immature city compared to a Brisbane or a Sydney or Melbourne, but we are trending in that same direction, just probably 10 to 15 years behind that curve. I forgot to mention this earlier. People are living a bit more hyper-local now, especially post-COVID. And so something that we've moved up our list in terms of capital growth drivers is local amenity. So obviously schools we spoke about, but if you've got a good public school or a good private school nearby, and if you've got fantastic local amenity, walkable amenity, so whether that's a big shopping centre like in the Northern Coastal Corridor where we've bought quite a lot, there was 2 big redevelopments of 2 shopping centres there, and they're probably 2 of the better shopping centres in Perth now. And so people can pretty much service all of their needs within their own suburb or neighbouring suburb. And if you're relatively close to the coast, you're probably also relatively close to the freeway and train station. So if you do have to commute into the city, it's pretty easy for you as well. So that Northern Coastal Corridor for us has been a big target over the last sort of 5 to 7 years.
Yeah, so you think that's obviously the coastal, the buy there, and obviously the access to amenity you've sort of pointing out, and ones that coastal probably locations, they've got better access to better amenity, are probably performing better, it sounds like. The one that wants to be a bit closer to the city and the beach and, the inner ring, I guess you call it, where are they going wrong? Is there danger zones where they maybe buying blocks too small or on the busier roads, or maybe the walk score is not great? Like, where are some of the buyers coming across and making mistakes in terms of maybe not putting enough weighting on certain types of livability drivers?
Yeah, I think if you're looking to get closer to the CBD, which I think at this stage of the Perth cycle is probably not a bad idea. I think the inner city, sort of the inner ring of Perth is performing very well at the moment and will continue to, and probably will outperform the bottom end when it starts to hit an affordability ceiling or not too distant future. So those areas I think are still ripe for investment at the moment, even though you are coming in relatively late into a cycle, which we're always very upfront with clients about. And people that are buying in those areas, I guess they've got aspirational suburbs that they want to get into, and sometimes they might squeeze themselves into that suburb, but in an inferior product or location, like on a busy road or whatever else it might be that we would see as a red flag. And so now they're in their desired suburb, but they've also got a product that's going to underperform from a growth perspective. That might not be their primary driver, but it's nice to get some good growth on your house. And then when you do go to resell that home and upgrade perhaps in the future, you're not going to have much demand for it because the market for something that's in a great pocket of a suburb is this big, and the market for something on a busy road is this big. So even in the strong market that we've seen over the last 4 or 5 years, you still see dampened demand for that sort of product, and we stay well away from it, whether it's an owner-occupier or an investor we're working for.
Yeah, it's interesting. I mean, we don't like to talk too much about where we're at in the cycle on this pod because I want it to be quite evergreen, but I do think it's interesting to talk about it at certain points. So, let's say we are in a bit of a later period of a growth run in Perth. I mean, almost doubled in the last 4 years, probably. I don't know.
I think it's up about 90% since the COVID sort of era.
Yeah, you probably find lots of properties that probably have even done better than that, right? And I think when you are buying late in the cycle, you do need to say the run's over forever. That's just a bit naive. People are buying houses to live in for families. Doesn't mean they shouldn't buy, but I do feel like you've got to be extra careful. Is that some of the biggest challenges you're finding? Because, you're paying premium prices for sometimes inferior stock in suburbs just because it's really undersupplied. And is that making it really hard to act as a buyer's agent because you're looking for needles in haystacks?
It's incredibly difficult in Perth at the moment, partly because there's no stock around, but then also we've always been very harsh assessors of property and locations. And as we progress further into a cycle, that harshness starts to trend upwards because we see greater downside risk in a lot of these cheaper suburbs now. So we're not really working with investors in the Perth market, ideally below about that first home buyer cap of 850 at the moment. We'd like to see people get away from that first home buyer demand and separate themselves from that competition, partly for the competition reason, also because I just see more runway in front of that 800 to $1 million or more price point where it hasn't performed quite at the level of the lower quartile over the last few years. We predicted last year that would start to outperform, and the middle sector is now really performing almost on par with the lower quartile. So I think that's probably where we're at with the Perth market, and at some point we probably will turn the tap off for investors in Perth and start to pivot them across to other locations. Melbourne's the primary one at the moment. And then to your point about coming in late in the cycle, we had a conversation with a client that was referred to us by one of the top financial planning firms in Perth, and they gave us a bit of background on the client. They gave us the brief, and then we went back to them and inquired based on the fact that they were getting closer to retirement age. They're only about 6 or 7 years out from transitioning into retirement. That really dictated where we were going to put this client, because if I put them into Perth, which was actually their preference and we had to talk them out of it, then they might get another bearishly 10% growth, bullishly 20, 25 maybe, who knows? But then you're going to enter into a plateau, and then you're going to enter a softening in these cyclical markets. So the timing of that happening might actually coincide with when they might want to sell that property and get rid of that higher growth, lower income asset, and then start focusing more on income as they transition to retirement. But that for me ruled out Perth, and I actually said to them, I won't buy for you in Perth for that reason. And luckily they were accepting of that. And now we'll go into Vic, where I can see that horizon looking a little bit more positive in terms of what we've got in front of us.
I do like that. I mean, you can get very pigeonholed, and this is one of the challenges of the buy station industry, right, of being, I guess, local specialists, is that sometimes markets, not really the best place to be investing. And at certain points, it's maybe better to be spending money in other pockets for typical investors, not to say so much for the owner-occupiers. And the Perth market, it's just due to the size of the run. It doesn't mean it's over now, but it does mean that you are starting to get to affordability metrics. So if you think about this next stage of the cycle over there, like what are some of the areas that have really, say, outperformed and a higher risk? I mean, you mentioned very earlier on about the bottom end of the market has been, heavily driven by interstate buyers agents and become very heavily dominated by investors rather than owner-occupiers. Is there any other also pockets where you feel like there's a bit of a concern? I mean, Perth had a lot of issues with overbuilding in that last boom and house and land packages and apartments. But if you think about the danger zones in Perth right now, where are they?
With dwelling approval numbers have improved in Perth and over the last sort of 12, 18 months. So they've been trending up. They need to be to meet demand. But the fact that people are starting to build more is putting more pressure on the workforce, and prices are going up again and timeframes are blowing out again. So whether that trend will continue, I don't know. In terms of areas of risk, obviously areas where there's going to be release of new land and have future sort of supply risk, we stay away from those always, but especially later in a cycle. And then look, the low-hanging fruit for big buyers agencies who want to buy 50 or 100 properties a month is cheap areas with decent yield. And if you're only looking at two metrics, they're pretty easy to find. We don't buy in those sorts of areas like your Armidale. We didn't buy in the Rockingham LGA. We didn't buy, certainly not in Mandra. Now, people have made a ton of money buying early in those areas. So not saying that you shouldn't, but we're not buying 50 a month. So we can be more particular and we can take a more long-term view and buy properties that we think will outperform over the long term with less downside risk. And so that last term is probably the most pertinent one in terms of where we're at in this cycle, is making sure that if we're going to put a client into any asset in any market, we're assessing downside risk and what that might look like. And if you've got 40, 50% renters in a suburb and they're all starting to put their attention elsewhere or profit take and sell properties, you're going to see an oversupply pretty quickly. And that's what I think will happen in those markets. And then they will soften first and harder ahead of what the Perth median does.
Yeah, and I think it's a worthwhile conversation right now, just because it is something that's become a bit of an issue in the Perth market per se, right? So if you talk about, say, the Rockingham market, and it's basically been driven, a lot more than maybe 40-50% of the current owners are now investors. It wasn't always that in the past. And so are you starting to see that softening? Investors are saying, oh God, maybe I should take my money and run. And instead of it being an undersupplied market where there's just too much demand, it's now starting to flip the other way. Even though the broader Perth market's still probably massively undersupplied, these pockets are now starting to flip and become much more choice for owner-occupiers. But it's at a price where a lot of our new owner-occupiers just don't want to pay.
Yeah, that's right. You've sort of priced the locals out of their own suburb. And so if you're buying in a lower socioeconomic area and investors have flooded in and driven prices to a level that locals can't afford, and then that investor demand being transient goes somewhere else like it is at the moment to a degree, there's still a lot of investors buying in Perth, but it's certainly down from that FOMO level of activity we've seen over the last few years. We know what's going to happen in that scenario. You're removing a ton of demand. It's going to create more supply. And because locals can't really afford to spend 900 grand on a family home in a suburb that 5 years ago was 450, you're going to see prices soften harder than where you would elsewhere. And if you're trying to sell a property in that sort of market, in one of those sorts of areas, it might be like trying to catch a falling knife.
Is there better value at the top end right now? I mean, you mentioned top end hasn't underperformed. Is there still really strong demand? The people who have probably done all right over the last few years in Perth, maybe they had a house worth 1 that's gone to 2, but that still find that it's worthwhile jumping to that next level. Is there better value for money, you call it, as you move up the Perth market, or is it that market still really strong?
Yeah, I guess when you start pushing up in terms of investor budget, then obviously the client needs to have that capacity. They need to be able to carry what is probably going to be a lower yield, because typically the more you spend, the yield tends to soften a little bit. And then also if you're buying a property that's worth, say, $1.5 million, I think there's probably more runway in terms of growth for that price point than there is at half that price at the moment. But the higher holding costs, the higher vacancy in a softer market or a higher supply environment, that sort of product or a soft economy, that sort of expensive rental could sit vacant for a while, and you may have to soften that yield further than what is actually happening across the board in Perth. So these are all the downside risks that we look at when we are assessing a client and then giving advice on what their brief should look like and their budget should look like. But certainly my comfort level's sort of in that 2 million area at the moment, but most investors are not really applying that sort of budget.
Yeah, I think for an investor, you're right. There's obviously a point in time for any market where it's really hard to manage, and you might be better off to spread your gunpowder across a few properties in the 1 to 2 range than a 2 to 5 range. But if you think about from an owner-occupier point of view, is there a lot of value in sort of educating the owner-occupier side of your business? Maybe you should be stretched to 2.5. And when you're helping owner-occupiers, are you sort of helping them often reframe the purchase price they want to spend to end up getting better value for money?
Yeah, often a client at that level, so if we're talking about the prestige division, they'll come to us with a maximum capacity from their broker or their bank. We'll then talk to them about their comfort level. So we always ask clients for their ideal budget and then their absolute maximum budget. So if we found the perfect property, what would you stretch to? And then we'll shop to that ideal budget and hopefully stay around there. And we fix our fees always, so we don't charge a percentage, so there's never any incentive for us to spend more of the client's money. So for example, we did one recently. There's a CEO who's relocating from the UK to Perth with his family, and we spent considerable amount of time with them, developing their brief, learning a lot about them, where the kid's going to go to school, assisting along with their relocation agents, getting them into those schools to do tours and so forth. And this is something we're going to lean into a lot more next year with more of a white glove type service for these sorts of buyers, so that we can really cover every aspect, especially if you're relocating and you're not familiar with Perth. We can provide a very high level of expertise tailored to suit their specific needs. So if you've got young children, if you're considering private schools, we can advise on all of those sorts of things and get you into the right house in the right location to tick as many of those boxes in terms of what's most important to them.
So Matt, you mentioned when you started, you said you had 4 or 5 different buyers agencies, and you were working at a pretty established firm over there for some time as well, which probably would have helped you early days, just, a bit more of a market knowledge. But how is your longevity as a buyer's agent there and being on the ground pre this boom? How does that really help you, give you an advantage with the agents over there? Because obviously when they get calls from new industry buyer's agents or ones operating in different states, it doesn't take much to pass the sniff test. So what's your thoughts, and how does that really help you with an established business?
I guess when having worked in both markets, a very oversupplied market and now a very undersupplied market, our approach needed to shift quite dramatically. Our value proposition to our clients changes quite a lot as well. In a softer market, it's more about taking our time, looking at lots of properties and trying to find the absolute best property at the absolute best price and negotiating hard and then renegotiating during DD periods, which we used to be able to do here. And now it's more about, can we secure you a good asset without overpaying and understanding where we need to be to meet the market. In terms of the new buyers agents that we spoke about coming into the market, but had a bit of an impact, I think, on selling agents in terms of, if you don't know me, if we haven't dealt together yet, and I call you and I say I'm a buyer's agent, that never used to be an issue, but probably in the last couple of years, I think especially, there are a few of them that have been put off by dealing with buyer's agents because of that experience with someone who is either inexperienced or doesn't know how to build relationships and doesn't know how that relationship should work. Yes, we're both working for opposite outcomes. We want the cheapest price, you want the best price. That's all fine. Most agents understand that we're going to come in and do our job and negotiate hard. We're going to try and load the contract with as many clauses and conditions as we can, but we're also very realistic about market conditions and understanding what we need to do to secure a property and make sure that agent wants to deal with us on the next one. So maintaining those relationships has become a little bit more challenging, but because we've got that 10-year history of doing that in Perth and we've got a good track record of being good to deal with, very professional. And so that's really helped us in terms of continuing to access off-market and pre-market opportunities for our clients when stock has really dried up lately.
I mean, the Perth market obviously had a period where adding value and trying to manufacture growth was a big part of the market pre the COVID boom. How does that sort of come into your value proposition now when you're helping clients? It seems to have a very investment focus in terms of what you do there and the analytical side of making sure the investment side stacks up. How do you bring that into when you help clients?
Given the state of the availability of trades and the cost to do work over here at the moment, we're far less likely to put someone into a very depreciated home that requires a lot of work. Whereas 7 or 8 years ago, we'd happily do that. We'd buy something that's pretty much 100% land value with a good structure on it and then rip through and spend 50 grand and all of a sudden we're getting a 5% yield on it. Whereas nowadays that strategy doesn't really work. It takes too long to facilitate and it costs too much. And so there are still certain areas that we can achieve value uplift through renovation. And so that is something that for the right client, we will implement. And then for our development clients, in terms of anyone's looking to subdivide or develop, we've sort of backed off from that space over the last few years because of the issues in the construction industry. which have been national issues, but probably worse in WA than anywhere else, I think. So we've sort of stepped away from that, both me personally as a developer and for our clients. But we've been also, in the background, I've been exploring different construction methodology options, and we've pretty much found one, and we're looking to partner with a couple of builders where we can start putting together. We're looking at a 5-townhouse site in West Perth that we bought for a client a couple of years ago at the moment, and we can build 3-story townhouses, 5 of them with rooftop decks in about 9 months. Whereas if you went the traditional Perth style of double brick and tile, which is what everyone expects over here, that would have taken 18 months or more. So the ability for us to try and find better solutions for clients to execute that sort of thing is where we've been focused before we start dipping our toe back into that water too heavily, like we were managing 25, 30 projects for clients.
Yeah, I mean, the New South Wales government's obviously making huge changes. The Victorian government, even more so than New South Wales, Queensland's pro-development. How is the sort of WA market shifting? Obviously, prices have gone up. Feasibilities are going to make more sense, but then building prices have gone up. And zoning's obviously a big part of this. And, how are they approaching the housing problem that's brewed? And how is that going to pivot in terms of zoning and approval times? And how is that affecting the overall Perth market in terms of how you're approaching it?
You never see a great net impact of these government policies and decisions that they make to try and improve housing supply. Part of the issue is out of their control. Like you said, construction costs are very elevated, and we've sort of gone back and forth a little bit in terms of it's cheaper to build, it's cheaper to buy established. And so we've sort of been backing, toing and froing on that. And it is the government's job to help solve this problem, but I don't know what the solution is personally. There's a few things that they could probably do that they're not, that I could sort of discuss with you. But I think overall, the biggest issue we've got is that, one, the construction industry, the issues we spoke about, and two, Perth historically has not been a very density or apartment-centric city. Everyone wants a 4x2 with a pool on 700 square meters in Perth. Now, that's how we've been historically, but over the last few years, what we've seen is a shift as the city starts to mature and the population grows, which would happen in any maturing city, I would imagine. We've got the rezoning there to create more infill product, more medium density product. There's obviously zoning for building apartments and high rise and higher density, but it's just that stuff's definitely not happening in Perth. The approval numbers for apartments are dismally low. I think it was, I can't remember the exact figure, but it might have been some like 30 apartments that were approved last month or something like that. So we are going to be forced into that sort of product, but it's going to be a slow burn. You have to be dragging people out of their 4x2s and putting it into 3x2 townhouses and trying to pitch them on the benefit of being closer to all of these different things that they may value, whether it's the city or the beach or whatever it may be.
Yeah, it sounds like it's going to be some time they're going to potentially keep trying to expand the housing demand up and down the sort of coast. And, it's going to take some time until people start to make that lifestyle shift to more density living, and, even places like Brisbane and even Sydney, to be honest. It takes time, right? People need to make those compromises and see that's the best option for them as a family. And getting to the city quite easily takes that pressure cooker element out of the Perth market a little bit, it sounds like it. If you think about the value add as a buyer's agent, obviously finding out relationships, market knowledge, negotiation, helping them figure out the investment element. What are some of the things that you think a lot of your clients really value that often they don't expect?
Yeah, I guess buyer's agents often pitch themselves on a lot of the same sorts of things. So we buy 80% of our properties off market, which is typically BS. And a lot of those buyers agents that are buying off market at that sort of level are overpaying for properties, unfortunately. And so the agents know that they can call that buyer's agent and get a top price for their client, and they don't have to work on the weekend. So that's working out for the sellers and the selling agents. But in terms of the value that we add outside of the typical stuff that is pitched, I think it comes down to experience. It comes down to being able to condition buyers to make good decisions and to pounce on opportunities when they arrive. Playing marriage counsellor sometimes, trying to figure out, often when we're working with owner-occupiers, if I see a disconnect between the husband and wife or whatever the partnership may be, I might ask them to fill out a brief separately, and then we'll sit and we'll navigate it through it like a mediator and figure out how we're going to put together an actual brief that we can apply resources to, so that we're not wasting time going down this path when the wife wants the other path, or vice versa. So those sorts of things that we do, along with access to our network of peripheral professionals like the brokers like yourself and settlement agents and solicitors, and if anything goes awry, we've got all of these people that we can plug in who we've had plenty of experience with to make sure that we're managing that process as seamlessly as possible for them.
Yeah, you make two really good points. The marriage counselling things, absolutely. It's not one party or the other party. They both are self-sabotaging each other often, and then one will lead the conversation and then the other one will jump in at the end and try to self-sabotage it. And it's constantly is this battle. That's quite costly, right? It's costly in terms of time. And then if they do end up just going along with it, it becomes a bit of an issue where they probably should have spoken up and got what they wanted it part of the conversation. And so I think that's really valuable when you can feel that disconnect. I can sometimes on quiet calls, I can feel it as well, and giving the other person a chance to speak with that mediator, that independent person in the middle there can be extremely valuable to actually make sure they buy the right property for them. And you're right. I mean, all the professionals you sort of meet over the years, the good building and pest people, the good conveyance, the people that, even the architects or the builders or the town planners and all the things that, you sometimes need to call on to the engineers to actually just assess a property quick can be the difference to actually get the deal done, right? Sometimes you've got to move extremely fast or kill a deal with some other professional help. And sometimes those relationships take years to sort of build, to know. And it could be the difference in actually getting the right property or not. Matt, it's been so good to have you on. I think the Perth market's at a very interesting point. I think it's not to say that it's over, but I do think you've got a good grasp of how to advise clients in different markets. And I think that's really important. I think that sometimes a lot of people using buyer's agents from different states, they're just going to have properties that they're just not going to know how they're going to perform in a tougher market over there. And I think the best way to buy property is to protect yourself for the down market. So thanks so much for coming on. It was a really good chat. Cheers. Talk soon.
Talk to you soon. Bye.
Thanks so much for listening today. We hope you got lots of value out of it. If you'd like to speak to our guest today, there's links in the show notes on how you can get in contact. And if you're buying your first home, upgrading, renovating, or need any finance-related queries, obviously we'd love to help. There's links in the show notes to us as a mortgage broker, and we look forward to next week's episode.